Hello and welcome to Kathy's CPP exam prep tutorial. Today, we're going to break down the essential payroll tax figures you absolutely need to master for your exam.
We'll be covering Social Security, Medicare, and that often tricky additional Medicare tax. Nailing these numbers is key to passing, so let's dive right in.
First up, let's talk about the cornerstone of federal payroll taxes, Social Security. Now, on the exam, you're not always going to see it called Social Security. You need to know its official acronym, OSDI. Knowing the full name Old Age, Survivors, and Disability Insurance is really crucial. It's not just trivia. It actually helps you remember what the program is all about. For the exam, you've got to make that connection between Social Security and OSDI totally automatic in your mind.
All right, let's look at the numbers for 2026. The tax rate is 6.2% for the employee, and the employer has to match that with another 6.2%. But pay really close attention to that wage-based limit. This is a concept you absolutely have to understand. So, what is that limit? For 2026, it's $184,500. This means only the first $184,500 of an employee's earnings are subject to Social Security tax. Any income they earn above that is not taxed for OASD. Now remember, this number changes just about every year, so you have to be sure you're using the correct year's limit for your exam.
Okay, so that's Social Security. Let's build on that with the second major component, Medicare. You'll also see it referred to as hospital insurance, or HI. The most important thing to remember here is how it's different from Social Security.
The Medicare tax rate is 1.45% for the employee, and again, the employer matches that with another 1.45%. But look closely at the wage-based limit. See that? It says none, and that's because there isn't one. Every single dollar of an employee's Medicare subject wages gets taxed. There's no ceiling, no limit. That is a huge point of distinction.
All right, ready to add another layer? Because this is where a lot of exam questions will test your detailed knowledge. We're talking about the additional Medicare tax, which, as the name suggests, only applies to high-income earners.
So, what exactly is this tax? Well, you can think of it as a surtax that was introduced back in 2013. It gets applied right on top of the standard 1.45% Medicare tax we just covered. It's basically an extra layer just for higher earners. And the rate itself is pretty straightforward to remember. It's 0.9%. This tax gets levied on wages and self-employment income that go over certain thresholds.
Now here is a huge point, and it's a classic exam question, so listen up. Unlike standard Social Security and Medicare, there is no employer match for the additional Medicare tax. This is paid entirely by the employee. You can bet you'll see a question about this, so lock that one in.
Okay, this is where it gets a little more complex. Liability isn't just about income, it's about income and your filing status. So as you can see, a single filer is liable for the tax on any income over $200,000, while a couple filing jointly has a higher threshold of $250,000. And that brings us to the most complex part of this topic, and a place where test takers often get tripped up. We have to understand the difference between an employer's responsibility to withhold the tax versus an employee's actual liability to pay it. And believe me, they are not the same thing.
Okay, pay close attention here. An employer's duty to withhold is very simple. The second they pay an employee more than $200,000 in a calendar year, they must start withholding the 0.9% tax. They do this without any regard for the employee's filing status. But the employee's actual tax liability depends entirely on their filing status and total income. So you might have an employee earning $220,000 who is married and files jointly. The employer will withhold the tax, but that couple might ultimately owe no tax if their combined income is under the $250,000 joint filer threshold.
This quote, which is based on IRS guidance, really cements the rule. The employer's responsibility is absolute and straightforward. Wages over $200,000 trigger withholding, period. They can't stop withholding even if an employee asks them to. The employee has to reconcile any over- or underpayment on their personal income tax return.
All right, I know that was a deep dive, so let's pull it all together into a quick cheat sheet with just the facts you need to memorize for the exam.
This is your cheat sheet. Social Security, 6.2% up to $184,500. Standard Medicare, 1.45% on all wages. Additional Medicare, 0.9% paid only by the employee. And the critical distinction, withholding starts at $200,000 for everyone, but your actual liability depends on your filing status threshold. You have got to burn these numbers into your memory.
Memorizing these numbers is step one,
But are you ready for a scenario where an employee has 2 jobs, receives a bonus, and their spouse is self-employed? That's where true mastery is tested. Thanks so much for watching, and good luck with your studies.